Уважаеми колеги,
Dear colleagues, it is a great privilege and pleasure for me to co-chair our session that is dedicated to stability, economic coordination and governance in the European Union.
just wanted to have the chance to hear a little bit of the Bulgarian language. First of all, I would like to welcome all the representatives from the national parliaments, as well as the members of the European Parliament. Of course, special thanks to Mrs. Tyson for having accepted to participate in this session. The first session focuses on the 2018 European semester cycle, as you know. The purpose of this session is to debate the political priorities of the 2018 semester cycle as set in the annual growth survey with the European Commission before it's endorsed by the European Council. The outcome of the discussion could be reflected in the dedicated own initiative reports prepared by the Econ and Employment Committees in the European Parliament, whose rapporteurs will give an overview of their draft reports at today's session. I would like to apologize on behalf of Mr. Gutierrez. Unfortunately, he has a meeting that has been running a little bit longer, so he will be joining us as soon as possible to co-chair with me today's session. Delegations will be invited to share their experiences with the goal to work towards a more closely coordinated economic policy. I would like to tell you a little bit about the housekeeping rules, just so you know how this session will go on. I would like to briefly outline the modalities of taking the floor during this meeting. First of all, I would like to underline that, as usual, we will do our most to ensure that everybody who wants to speak has the chance to speak and to participate, to express their views, even if our meeting time is, of course, quite limited. In view of the large number of participants, please do understand that it will most probably not be possible for every single one of you to take the floor. This is also why I kindly ask you to keep the interventions to 2 to 3 minutes maximum, as shown on the clock that you can see on the display. Depending on the development of the discussions, we might have to adapt the time to fit in the schedule, because you know that we have other meetings following this one. On your desk, you will find speaking cards with which you can indicate that you would like to take the floor. If you want to do so, please fill out the speaking card and hand it to the ushers that you can see throughout the plenary room. This applies to both members of the national parliaments and also to the members of the European Parliament. In general, we'll try to divide the speaking time according to the following formula: 3 members of the national parliaments, 1 member of the European Parliament, and so on. Again, if we need to change this formula during the discussion, we will do so. We're aware of the responsibility that the Bulgarian presidency parliamentary dimension in times of overlapping crisis and challenges has, where national parliaments and their members play a key role in ensuring the accountability and legitimacy of the European Union actions before their citizens. Bearing in mind that the European economy is growing, investment is recovering, public finances are improving, and unemployment is almost down to pre-crisis levels, I believe that the national parliaments, as well as the European Parliament, should call for policies that support reforms related to the advancement of the institutional and business environment, the facilitation of investment, the creation of quality jobs, and the reduction of inequality. Again, a warm welcome from the Bulgarian presidency of the European Council, and without further ado, I would like to pass the floor to Mrs. Thyssen, European Commissioner, you know, for Employment, Social Affairs, Skills and Labour Mobility. Mrs. Marianne Thyssen, the floor is yours.
Thank you, Madam Chair. Dear chairpersons, members of Parliament, ladies and gentlemen, it is an honour for me and a pleasure also to talk to you today. An honour because the European Parliament and national parliaments have a crucial role to play in reforming and improving our economies and societies. It is only together that we can succeed. And it's a pleasure because after many years of crisis, it is nice to be able to bring good news. Growth is up in all our member states, investment is recovering, and there are more people at work in the European Union than ever recorded. Even so, we have not yet fully overcome the legacy of the crisis. We are still dealing with high levels of household, corporate and public debt. More than 18 million people are still seeking a job, and recovery remains uneven across and within member states. This Commission's number one goal is to make sure that today's renewed growth is inclusive and sustainable in the long run, that we achieve convergence in the European Union, and that our economies and societies are prepared to harness the opportunities and address the challenges that technology and globalisation bring. As the President of our European Commission, Jean-Claude Juncker, put it, it is time to fix the roof while the sun is shining. Dear Members of Parliament, we are now preparing the country reports for publication on the 7th of March. These are the analytical underpinning of the country-specific policy guidance, including the country-specific recommendations, the CSRs, that we will present in May. The reports analyse the economic and social situation and trends in the Member States, and they assess also progress in implementing the CSRs of the past. While these country reports will be published in a few weeks, I would like to share with you the key messages which concern the European Union as a whole. First of all, it takes time to carry out reforms, but we are moving in the right direction. Since the start of the semester in 2011, Member States have shown at least some progress in over 2/3 of the recommendations, and in over a quarter of cases we saw substantial progress or recommendations were fully implemented. Second, convergence, which had altered or even regressed during the crisis, is restarting. There are positive growth rates and positive prospects for all the EU member states, but there is no room for complacency. Divergences among member states remain, and inequality has increased within our member states. If left unchanged, this poses a challenge for the sustainability of our growth and cohesion. Third, the overall exposure of the banks has started to decrease in almost all countries. Their profitability has recovered in almost all member states, but in a number of countries, high private debt continues to weigh on the balance sheet of banks and inhibit investment. And in some countries, there are still large stocks of non-performing loans. And fourth, labour market conditions. They are improving, but our work is not yet done. Tough joblessness and the risk of poverty are receding. The figures are still too high in many member states. And we have other worries. In some cases, the rates of unemployment and pay are stagnating, and the differences in the total number of hours worked across the European Union, and especially across the euro area, have been increasing. But maybe the most important message of the semester is that economic growth and social progress go hand in hand. Investment in people drives economic growth. At the same time, unequal societies put a brake on growth. In the long term, You can't have the one without the other. It is politically, economically and socially both unsustainable and undesirable. This key insight is why, throughout the Commission's mandate, the semester has become more social. But this year's semester cycle is a landmark. A few months ago, we proclaimed the European Pillar of Social Rights, as you know. The Council, the European Parliament and the Commission did it jointly. The pillar is a political commitment to the insight that a strong social Europe is the only way forward. The pillar summarises essential European social principles and rights, and it shows where work is needed. But the success of the pillar depends on the extent to which we implement it, at European level, but especially also at national level. Following the proclamation and starting from this year, the principles of the pillar are now embedded in the semester. To ensure proper monitoring and implementation, we have developed the so-called social scoreboard with 14 head social indicators to keep track on how we are doing on the pillar. The scoreboard will therefore play a major role in the upcoming country-specific reports and CSRs. Looking at our analysis so far, ladies and gentlemen, there are 4 principles that come back throughout our recommendations. First, fiscal policy should not just focus on improving the headline deficit and debt ratios. The quality of public finances equally matters. Tax systems, for example, should be fair and growth-friendly, encourage employment and support private investment. Second, investment in people is essential. Only an educated, skilled labour force can seize the new opportunities when the labour market changes, and only with proper social security coverage for all workers can people make the necessary transitions in the new world of work. Third, we should continue to work on investment more generally, because overall investment and public investment still account for a relatively low proportion of GDP. And fourth, wage growth contributes to the economic recovery, reduces inequalities and ensures high living standards. Efficient wage-setting systems, wage-setting mechanisms are essential to ensure that wages are differentiated. Of course, depending on country-specific conditions and taking due account of changes in productivity. These are no small things on a country's to-do list, and it is not easy to fix the roof properly and decently. The inhabitants of the House expect a minimum of cost and nuisance. They want to distribute the burden fairly. They want all voices to be heard and the decisions to be owned. And they expect you to maximise the long-term benefits of the repair. Dear chairpersons, ladies and gentlemen, the country reports are only the beginning of this second phase of the European semester 2018. Like last year, there will be ample time for discussion with national governments and with society as a whole prior to publication. This not only helps us to be precise in the analysis, it also enables a dialogue and a common understanding. The European Parliament and the national parliaments in the Member States are vital partners in this dialogue. Like in previous years, several members of the College of Commissioners, including myself, will travel to Member States to discuss our findings with our national counterparts, the national parliaments and social partners. Ladies and gentlemen, this is a joint mission. So let the country reports be the beginning, and I personally cannot wait to get down to work along with you, to achieve our shared objectives. I thank you for your attention.
Thank you, Mrs. Tyson. Some priceless remarks that you've made here. Of course, I'm sure we all agree that this is a joint mission. Our second speaker is Mr. Christoph Hetman, Rapporteur on the 2018 European Semester from the Committee on Employment and Social Affairs of the European Parliament. Mr. Hetman, the floor is yours.
Dziękuję bardzo, Pani Przewodnicząca.
Thank you very much, Madam President. I also would like to say that I'm very grateful to share my thoughts concerning the annual growth strategy. But first of all, I would like to thank Madam Commissioner and the Commission as such for having prepared the annual survey on growth, which starts our cycle of economic policy coordination in the EU. So basically the European semester. Undoubtedly, we are very happy that the European economy is recovering. Investments are growing and unemployment is going down. GDP is higher than previously expected. And if we look at it from the point of view of macroeconomics, you could say that the situation is pretty good. However, there's also the other side to this coin. Despite all those positive signals, we do realize that there is still a lot of work to be done. We have to pay particular attention to the fact that the unemployment among the young people is still very high. It is more than 16% as we speak. More than 6 million young people in the age brackets 15 to 24 is not working and is not studying. Also, the level of poverty and level of social exclusions remain uncomfortably high. In order for this European semester process to be a success, we need two things. First of all, those reforms must be long-term reforms. And secondly, the countries have to focus on the country-specific recommendations and implement them very well. And this is our weak point. We do not do it well enough. If we go back to 2016, it's only 2% of the recommendations that were fully implemented. Partially, 43% of those recommendations were implemented. That leaves 55% of recommendations that were not implemented almost at all. So the question for us is why it is the case. Is it, as some point out, a problem of the institutions, national institutions in our member states? Or maybe this is because the member states prefer to implement their own solutions, their own strategies to solve the problem. But then the question arises whether they might be compatible with what the Commission recommends. Unfortunately, if we look at those numbers, it seems this is not true. Or maybe those recommendations are too numerous. Maybe they are too ambitious for some of our member states. This is something that we still have to find out. We have to talk about it, and we have to get to the bottom of the problem. And of course, we have to be very pragmatic. I cannot stress that enough. Our goals, of course, are ambitious, but they must be possible to be implemented in our member states. Last year in November, during the Social Summit in Göteborg, our three institutions adopted the European Social Rights Pillar. This document enumerates all the principles that are necessary for well-functioning labor markets and social security systems. I think that those principles will be a reference point for the implementation of our economic convergence programs in the European semester, and we have to remember about structural reforms that are supposed to improve the situation on the labor market. We have to increase productivity, we have to allow for higher wages, and we also have to improve our social security systems. That is why this social rights pillar is so crucial at this point. And that leads me to another problem that affects many people in the EU. This is something we talked about in March last year. Apparently, since the crisis started, the inequalities in income has increased in 2/3 of our member states. Of course, this goes hand in hand with high unemployment or very precarious contracts in the job market. The problem is that both as far as wages are concerned and in different situations in terms of development in our member states, it's across the board. I'm not just talking about the old EU versus the new EU. So the crux of the matter is that the rich are getting richer and the poor are getting poorer. So this gap is widening instead of getting smaller. And that is coupled by still another problem. There are intra-regional differences which are becoming more and more pronounced. We can see how one part of a region is getting poorer and the other at the same time getting richer. Undoubtedly, we have our cohesion policy, which is a great tool to fight all the inequalities. So we have to keep it at the same level in terms of financing in the next multi-annual financial framework. However, MMF itself is not going to solve this problem. This is not a silver bullet. We need a much more user-friendly cohesion policy with much less red tape, and it must be much, much closer to the final beneficiary. We also have to take care of the link between the skills and what the labor market needs. So we really have to invest in the digital literacy of our society. 90% of all the jobs available on the market means that you have to have digital skills, and so many people on the labor market, around 43%, does not seem to have enough qualifications in terms of digital digital skills. Also, employers signal all the time that workers are not meeting the needs that they are looking for. So this mismatch between employer and employee is also getting stronger. Unemployment is apparently high, but it's still quite difficult for employers to find employees or workers. Now, this goes hand in hand with the problem of competitiveness. SMEs are, of course, crucial in this respect. We have to support economic growth in such a way as to bring down the red tape for SMEs and to remove all possible barriers for their operation on the market. And here the cohesion policy, of course, might help, not only help those who want to invest in innovative skills or innovative solutions, but also those who just want to better educate our students. Also, new market for new services. Yes, of course, innovation is very important. And one of the last political priorities I would like to talk about is the fact that our society is aging and people are leaving from peripheral regions, from transnational regions, but also if we look at the urban population, we can see how human resources is flowing in one direction only. Urban peripheries are getting less and less populous, and people there are getting poorer and poorer. So we have to take care of proper infrastructure, of proper provision of public services there, or perhaps more flexible solution in terms of labor market. We also have to improve our pension systems. We have to look less to the age, the pensionable age, and more to the number of years during which the person contributes to the social security scheme. And here the annual growth survey can also help us. I know that it is very difficult to balance all those rights and all those arguments of so many different sides, but I'm an optimist and I do think we will end up implementing everything, and I do hope that this report is going to be a strong signal for both the Member States and the European Commission. Thank you.
Thank you, Mr. Hetman. Of course, I would again kindly like to remind the speakers, the main speakers, that they need to wrap up their time in about 5 minutes, just so we're fair to everybody. Again, thank you. And now I would like to give the floor to Mr. Hugh Bayet, Rapporteur of the European Parliament of the European Semester for Economic Policy Coordination, Annual Growth Survey 2018, for a maximum of 5-minute statement.
Oui, merci beaucoup.
Yes, thank you very much, Madam Chair. Good afternoon, ladies and gentlemen. Welcome to the European Parliament. Well, I'll try and stick to my speaking time. As the preceding speakers said, of course, we should only be happy that we are now getting back to healthy economic results. It's a recovery. Okay, it's a timid recovery, but we are seeing growth restored to the Eurozone. However, the macroeconomic indicators don't stop socioeconomic inequalities from growing within our countries. We see the phenomenon of the working poor, and there's a lack of convergence between member states. So it's on that basis that we have been negotiating the text of the report on the European semester in the Econ Committee. It's going to be voted for on Wednesday. I'd like to welcome my co-shadow rapporteurs, Tom van der Candelare and Barret Lucke, who's here in the room. Of course, we need a macroeconomic scenario that is stable and healthy so that we can guarantee full employment. And as we've heard, we need jobs that fit the ILO definition of decent work. Increasingly, workers are daily confronted with the results of rapid changes in the economy, and we as political decision makers need to be able to respond to those changes. That's why in this report on the European semester, we have an important chapter on bolstering our competitive sectors, that's to say research and development in Europe, linking in with the digital economy, insisting on the support that can be given to micro enterprises, the youth guarantee, education policies, and lifelong learning. These are all things that our companies need, and we also need a guarantee for the sustainability of our social security systems. Now, we have a scoreboard on the as part of the European semester, so we have a broader view. In the report, we also note the need for more public and private investment to support the real economy. As you may be aware, on private investment, we've only got back to the level of 2008, and on public investment, we are far below that level. So we are asking the Commission to evaluate the obstacles in the face of large infrastructure projects that need to be paid off over a long period of time. In many cases, these are public-private partnerships, and there are still quite a lot of blockages that stop the investments from getting through the pipeline. We are also looking at tax in Europe. The European Parliament has been playing an important role through the Econ Committee in these debates. There's still a lot of tax competition between member states, and that allows multinationals to establish themselves wherever the tax cost is lowest. Measures at the European level could help to prevent this kind of unfair competition and benefit our citizens and our states. Now, proposals supported by Mario Draghi as president of the ECB should allow our workers to get more purchasing power, create demand in the economy, and that should be effective. At the same time, we need to keep a close eye on public expenditure. We've seen budgetary increases at national level and at Eurozone level, and we need increases over time that will allow us to respond to the needs that are out there. we think it's very important to monitor the recommendations that are made, and there needs to be more interaction between the European Parliament and national parliaments in doing that, together also with the social partners who are involved in different levels of social policy in our different member states. So I hope the Commission will take into account the guidelines that we're putting forward, and I hope that on Wednesday we'll get an agreement that will be satisfactory to all of Europe's citizens. Thank you very much.
Thank you, Mr. Baye. Before I give the word to the next speaker, Mr. Milosevic, I would like to apologize on behalf of the Bulgarian delegation that needs to leave to attend an event with Mr. Tajani, the President of the European Parliament, as well as Mrs. Karayancheva, who is the President of the Bulgarian National Assembly. So they will be leaving shortly. And now, without further ado, I give the floor to Mr. Ivan Milosevic, Chairman of the Committee on European Affairs of the Croatian Parliament, for a maximum of 5 minutes. Mr. Milosevic, the word is yours.
Thank you, Madam Chair. Dear members of the Parliament, dear colleagues, ladies and gentlemen, good afternoon. Let me first thank the European Parliament and Bulgarian Presidency for this invitation today on behalf of the Croatian Parliament. It is indeed much easier to address different issues when the Union and all the Member States achieve robust and stable economic growth, raising employment rates, and prosperity is back on track. I'll start with some general topics first, go through the convergence, and then end with some Croatian perspectives. Coming from the private sector, I'm always in favor of cutting taxes and bureaucracy, but 150 billion euros of the EU budget versus 15 trillion of Europe's gross national income obviously doesn't make the budget the primary issue. The real issue is our common goals, strategy, and how we want to achieve those. On the other hand, a US tax reform has and will have a global impact on business and investment decisions, and the EU and national governments and administrations will be in competition even more than before. Competition not only for the investments and capital, but more importantly for the brightest people of all age, not only the young. Structural reforms, better business and investment environment, and lower taxes are all important, but education must be our priority number one. That is why we should all put highest efforts and resources into all levels of education and bring it as close as possible to both public and private sector, as well as all institutions and platforms that connect the two. Challenged by the external migrations, we tend to discuss less the internal migrations and the risks it brings for the future of EU stability. We cannot allow either east or south of the Union to permanently lose hundreds of thousands and millions of young, ambitious and hard-working people, those whom we need to finish transition and build a stable and prosperous societies. Let me say a few sentences about convergence. There is no swift and agile convergence without thorough reforms, but I dare to say cohesion policy is of the same importance. We need to keep cohesion funding strong, making utilization of the fund more efficient, simplifying procedures, but at the same time not losing transparency and accountability. I strongly believe not only less developed and net recipients benefit from strong cohesion and abundant funds, but all EU member states benefit from convergence and improving living standard of its citizens. In parallel, we may neither like nor want to bind execution of structural reforms with cohesion policy or funding, but I personally believe there could be some connection incentive for net recipients that bravely implement reforms, not only depending on different funds. In that sense, we support the Commission's intention to create a new instrument for assistance in structural reforms as effort in deepening the economic and monetary union. At the same time, we could all do a better job in communicating and promoting the results of cohesion, utilization of European funds across the European Union, of European semester and national reforms, as well as benefits of all the above. In this case, it would be much more difficult to accuse the European Union for the bad and try to take all the credits for the good. We need to be fair and honest to build trust. Last but not least, let me say a couple of words from Croatian perspectives as the youngest member state. After a long and especially for the private sector exhaustive recession, last 2 years we have achieved stable economic growth, balanced state budget and public debt is decreasing. Private sector was bearing most of the recession cost and paid huge price, both in jobs and profitability, but at the same time is the real contributor to economic recovery, primarily by export of goods and services thanks to our European Union membership. Now it is a time for the public sector and our government, after last year's tax reform, to undertake a set of bold and swift structural reforms, especially if we want to move quickly towards Eurozone membership, which is one of our strategic goals. In this respect, the European semester has not only helped direct national reforms and preparations for joining the Eurozone, but also proven to be an efficient tool that boosts reforms across member states. Without continuous structural reforms, neither can my country faster converge with the most developed member states, nor will the Union be able to remain strong and stable, keep its global position and provide excellent living standard and long-term prosperity for our citizens. Thank you, and I look forward to today's discussion.
Thank you, Mr. Milosevic. Of course, we all know that member states' economic conditions can be very different in one part of the Union compared to another, and that's something that we all need to work on. I would now like to give the word to Mrs. Fabienne Keller, Chair of the Finance Committee of the French Senate. Mrs. Keller, the floor is yours.
Merci beaucoup, mesdames et messieurs.
Thanks very much, Chairman, colleagues, Madam Commissioner, ladies and gentlemen. Let me say good afternoon to the Commissioner, the two MEPs, the representative of the Croatian Parliament for the remarks that they've made, and let me, in my turn, speak from a national parliamentary perspective. I'm very pleased that we're having these exchanges of views between parliamentarians, because they will help us deepen the European project. I represent the French Senate, second chamber, and the chamber has used the new coordination tool, the European semester. So our Finance Committee, under the public finance law, took the initiative. Since 2011, the stability programme draft is examined by Parliament before it goes to the European Commission. There's a democratic requirement there, of course, but also we need to make certain that European mechanisms are felt to be fully belonging to France. And so, colleagues, new types of policy can't be brought in without national parliaments being fully involved. We're the ones who make sure that this stuff is legitimate and that sometimes difficult bits of legislation are accepted. And also, the national parliaments have to make sure that European economic and budgetary policy is carried out responsibly. So these improvements need to... It needs to be said that these have been improvements since 2010. And a European resolution, which I and Francois Marr tabled in the Senate. We stressed the importance of the contribution of the European semester, but I would like to hope, as I did last year, that to improve our interparliamentary meetings even more, it would be good if we could draw up conclusions or some sort of resolution which could be made official in nature and forwarded to the various decision-making bodies. So that brings me on to the priorities for 2018. The recovery is still hesitant, halting, although things are going better, but employment's still higher than it was in 2008, particularly for young people. Mr. Hetman's already pointed this out. The investment deficit is still pretty glaring, and the recovery will have to go through the rebalancing of policies, since the ECB wants to normalise its action as much as possible. That means, since other elements are going to have to be mobilised, we're going to have to carry out structural funds and investment support programmes. It means that we also need to work within the context of European coordination. That's what the Commission analyses for the Eurozone have said. assuming fairly neutral budget zones and for further rebalancing. We need, therefore, vitally need to respect public deficit criteria as under the Stability and Growth Pact. Efforts have been made in France, and the Finance Committee in the Senate has looked at this very much in detail, particularly in the autumn. And we hope that the results from 2017 will lead the Commission to say that France can exit the excessive deficit procedure next spring, so that we only now have to deal with the preventive aspects of that. As a national parliament, I think we're all going to be keen on the reduction of public debt criteria. It's by meeting our commitments, which we did set together, that we'll actually start really coordinating macroeconomic policies. And I do hope that member states will get together and put together a robust policy which will be more inclusive of the whole of the European Union. 2018 is also a year of elections in many member states, particularly in France. So 2018 should also see various projects which are in discussion at the moment coming through. I'm talking about banking union, which we'll be talking about in a while, but also deepening the capital markets union, improving the financing of our companies in the single market. That will boost growth and jobs. I also am thinking, colleagues, about renewing our national financial system, national tax systems, so that we can start to tap into the emerging digital market and to battle tax fraud and tax evasion. Hugues Bayet just said how important that challenge was. Following on from the discussions on the common consolidated corporate tax base, the famous Axis directive, that should be something which our companies should get involved in as well. I'm pleased to see Paul Tang, Alain Lamassoure and Pervenche Beres here, because they're working on the CCCTB, and it would be good if we could put up together some resolution together. Our citizens are expecting this, and it would be good if we could get it moving. Our citizens were pleased to see this was picked up again in 2016, and proposals were put together for improving it, so talking about, for example, taking better account of research support. The Senate's also keen on dealing with tax evasion and avoidance and tax fraud. We've already worked on VAT fraud and digital economy fraud. VAT fraud basically deprives us at national level of billions of euros, and it also gives ordinary people the impression that the tax system isn't fair. It's not the same for all in the European Union. Initiatives here can't just remain national in nature, and we'd like to see more consultation between parliaments so that they can work together to make sure that tax laws are obeyed in Europe, and I'm confident that everybody would sign up to that. Thank you very much.
Thank you very much to our speakers. I would like, also on behalf of the European Parliament and in particular the committees involved in this conference, to warmly welcome all the members of national parliaments. This year we have the record with 133 national parliamentarians who are registered. So I think this conference is gaining momentum, and I welcome this element, as well as the very good contribution we had from our speakers. And now it's time to give the floor to members of European and national parliaments. The first speaker is Maria Joao Rodriguez from the S&D Group. Please. I have to remind 3 minutes is, we have to be strict. Please, Maria.
Thank you very much, Chair. And I'm also greeting all my colleagues from the national parliament. This is a pleasure for us to receive you here. I will speak as the European Parliament rapporteur on the European Social Pillar. I noticed that most of the panel speakers underline the fact that social inequalities go on increasing in the European Union in spite of our efforts to cope with this. And the social pillar is indeed a strong initiative to respond to social inequalities, starting with children, young people, women and men, senior citizens, updating standards and dealing with old and social inequalities. We want to make sure that whatever the job someone has, this someone should count on the decent labour contract and also full access to social protection. This is one of the promises of the social pillar. But we also want to have convergence across member states, across regions, to have opportunities for all citizens. And that's why our discussion on the European semester is so important. Because indeed, the European semester should be conducted as a big process for upward economic and social convergence. The Commission has made important proposals in this direction. We have indicators to measure this convergence, but the big test will come when we need to correct imbalances, social imbalances, the same way we correct economic imbalances. And in order to correct, yes, we do need reforms, but we also need investments. And in order to have investments, we need to go further in our investment capacity with our private resources, our national budgets, our upcoming European budget. That's why the discussion on MFF tomorrow is so important. And last but not least, we need to equip our monetary zone, Eurozone, with a proper fiscal capacity. These are the conditions for us to have real economic and social convergence, I believe. Thank you.
Thank you. You have even saved 30 seconds. That's remarkable, a good example for the next speakers. And next speaker is Vukans, Yanis Vukans from the Latvian Parliament. He's the chairman of the Budget and Finance Committee, Greens Group. Please.
Thank you, Honourable Chair. Dear colleagues, in general, my country, Latvia, welcomes and agrees to the policy priorities of the 2018 European semester as defined by the last annual growth survey published by European Commission. We think that EU member states and the EU on the whole should continue work on fostering investment, implementing structural reforms and responsible fiscal policy. We would like to stress that the progress on implementation of reforms is uneven across the EU, as it has been recognised also by the European Commission in the annual growth survey. Thus, we think that the cooperation between the EU institutions and member states should be strengthened with the aim to accelerate reform implementation, where the progress has been insufficient. The current juncture of appropriate to implement structural reforms as growth is gaining momentum, investments are recovering and the situation in the labour market is improving. In general, we in Latvia support EU Council's recommendations for the Eurozone. In this context, we would like to stress the role of the EU single market, including digital single market, in the growth of EU member states. Thus, we support the recommendation to develop EU single market further, to eliminate all existing barriers for a free movement of goods, services, labour and capital. We would like to stress that it is also necessary to address the issue of internal labour market mobility within the EU single market that results in the depopulation of the least developed EU member states and regions. Latvia positively evaluates also the European Commission's work to strengthen the economic and monetary union, and especially Latvia supports further work on the Capital Market Union Action Plan. And in particular, we appreciate the support for local and regional capital markets development across the EU. as well as the work on the functional innovations. As an example from our side, on November 6 last year, ministers of finance from all three Baltic countries, Latvia, Estonia and Lithuania, signed a memorandum of understanding on regional capital market development in Baltics. The document sets out the commitment of three Baltic states to strengthen their cooperation in the development of capital markets on a joint basis. Parties agreed to work together on the design and implementation of the necessary measures, including the establishment of the legal framework, the introduction of new instruments, and the creation of the necessary market infrastructure. Thank you.
Thank you. Next speaker, Saura Pedro from the Congreso de España. S&D Group.
Sí, gracias.
Thanks, Mr. Chairman. Let me just give you some brief ideas. So as to try to make the European semester more effective. First of all, in the semester, we think that government reform plans and the cost of actually implementing convergence plans should have tax indicators in them. And we should have good governance involved there too. That's something that's significant and would help people seek this kind of tax convergence in the European Union as a whole. Secondly, we think that we ought to make certain that debates in national parliaments should also be shared with the Commission, the Council and the European Parliament, because that would make us more effective when it came to following through on the semester. Thirdly, let's reorient the fiscal compact. If we could change these rules in the various countries in the European Union, we could improve things very much. What I'm talking about is setting clear medium-term goals, have simpler measurements, and then build in short-term flexibility of the rules with independent bodies able to carry out their work. This is something which is very compatible with more democracy, with showing people what we're doing and helping in problem solving. And finally, my final point, which I'm sharing with colleagues from the European Parliament and national parliaments in the European Union, is let's have genuine European banks. This would be a good way forward to try to break that terrible link between public and private debt. It's an effective instrument which could really help that situation along. Thank you, Chairman.
Thank you very much. Next speaker, John Leyhart from the Parliament of Ireland, Vice Chair of the Budgetary Oversight Committee, ALDE Group.
Thanks, Chair, and thanks, Commissioner. There's two issues I'd like to raise. One is the stocks of non-performing loans that the Commissioner referred to briefly. So we have a situation in Ireland where there are 20,000 or so mortgages which it is proposed under pressure, obviously, from the European Union to be sold off pretty speedily. What's happening, though, is that vulture funds, or so-called vulture funds, are buying large bundles of these mortgages at significant discounts, and these significant discounts are not available to individual borrowers. So I think it's something that needs to be considered by the Commission, because some of the vulture funds are unregulated. These loans can be sold off, as I said, in bundles. So our feeling would be that banks should be compelled to engage with individual customers rather than seeking an easy way out to package hundreds of mortgages into single bundles and selling them off at discounted rates. Because, you know, if we're to be a truly social Europe, I think we can never forget that behind every loan is an individual, is a family, and there are other loans obviously related to businesses. So this involves, in many cases, people losing their homes. You have then the effect of that becoming a significant additional cost to the state. And in some cases, tragically, people have taken their own lives in the face of very significant, unrelenting pressure from financial institutions. The second issue is that I want to raise is the European Deposit Insurance Scheme, which is the third pillar of the banking union. And clearly, progress on that has stalled. It has lost momentum, and maybe the Commissioner may make a statement on exactly where that is at and where she sees it going in the future. But just to reiterate the point in relation to the first point, if we can somehow discourage banks from selling off mortgages and loans in bundles, and remember that there's a unique individual story behind each loan that a bank has to deal with. Thanks, Chair.
Thank you. Also, for the point you made on MPLs, actually, as we know, the push from the single supervisor goes quite in the opposite direction that you are wishing. So, but is a topic we are aware of, and that's the reason why we think that, we should carefully consider the measures in this field. Now, Mr. Mar Angulo from the Spanish Senate, EPP Group.
Buenas tardes. A mí me gustaría referir.
Thank you, Chairman. I'd like to mention the shared priorities, which I think everybody on the top table referred to, and which we're involved in very heavily in Spain. Competitiveness, information, the social agenda, and also trying to meet some of these challenges which we face, the population challenge, and what that means when we try to bring about the requisite social and territorial cohesion in our various countries, just as we've tried to do in the European Union as a whole. We're talking about economic recovery today. There's been a recovery not just in Europe in general, but also in my own country of Spain. We talked about the need for reform, and I think today we should also talk about the way the reforms have shown that they can meet these challenges and help us find responses to various problems. And I'd like to stress that in Spain, where for the fourth consecutive year we are in growth and we're growing well. In 2017 it was 3.1%, and we're also creating jobs. So talking about shared priorities, and as with other governments, we're focusing on training, on jobs, on policies that will continue to create jobs, and it's also focused on digitalization, a very important point. Somebody mentioned digitalization, and in the last Spanish Council of Ministers meeting, a working group was set up to look at what kind of shared measures could be brought in to link up 9 different ministries and create synergies, so that digitalization can be an instrument which will help us to continue to grow, continue to promote jobs, but also seeing digitalization as an instrument which will help bring about social and territorial cohesion. That's very important, because it's a way of increasing opportunities and guaranteeing equal opportunities in parts of the country where there are real problems because of a lack of population, because of a scattered population, and also trying to help achieve more social cohesion. I think that the variables that have possibly hampered long-term recovery have been unemployment and demographic trends. So, processes for creating new digital instruments, challenges such as connectivity in various regions and how to tap into the synergies that digitalisation brings about. These are all important things, and I'd like to stress that, as other speakers already have. Thank you, Chairman.
Thank you. Gabriela Cretu from the Senate of Romania, S&D Group.
Thank you, Chair. Dear friends, I shall draw attention once again that we are facing a diagnosis problem. Wrong indicators provide us with a less realistic image of society and leads to inappropriate reforms. At the moment, the main macroeconomic imbalance is represented by the ratio labour income to capital income and the concentration of wealth. We face a distribution problem. This is not only a social issue left-wing parties or trade unions could be interested in. This imbalance is reflected on the inappropriate investment-consumption ratio, which is the key ratio for long-term growth. This imbalance is a global one, and exporting its negative effects for our society, it is not possible anymore. Or this indicator cannot be found among the 14 indicators evaluating macroeconomic imbalances, either in the country reports within the European semester. Secondly, we have an economy without borders called single market and considered the most important achievement of the Union by now. But indicators with borders, national indicators, used for drafting policies and assessing their implementation results. For the genuine convergence we urgently need for keeping the Union united, the indicator commonly used is the gross domestic product per capita at the purchasing parity power. There are some inconveniences with it, as long as we want reducing development gaps and, in particular, gaps in development potentials. GDP shows what is happening in the country, not what remains in that country. Piketty has recently shown that returns and repatriation of profits are higher than money entering the treasuries, that means structural funds minus EU budget contributions, for all member states my country, Romania, belongs to. GDP is misleading, and because of being focused on the present and neglecting stock of assets, that is the wealth of a society, which is a prediction of its future development potential. The long-term development is linked to wealth, including human capital, and less with GDP level. Analysing the structure of revenues, we see a worrying reality. Profit convergence is excellent. In my country, it is over 80% of the European average. Household income, on the other hand, it is only somewhere at 32%. Our growth has gone in a wrong direction, being strongly divergent. If we add the divergent effect of euro, we could understand that inequalities within each member state and between member states represent the main goal European Union policies and coordinated national policies have to achieve, as many as you have already stressed. Thank you.
Thank you. So for reminding the insufficient place that investment have clearly in our fiscal framework. Margarita Marques from the Portuguese Parliament's S&D Group.
Yes, thank you very much, Chair. I'd also like to thank the keynote speakers who started off for us, and I'd also like to thank the organisers of this Interparliamentary Week. Commissioner Thyssen reminded us of one thing that we are very well aware of, which is that we're seeing economic growth in the EU, but inequalities remain significant within member states and between member states. There's a question that I would like to put to you. Does this require more involvement in economic coordination between member states? And are there enough policies in favour of convergence? Well, I think it's interesting to take into account these two different issues. Economic growth on the one hand and growing inequalities on the other, so that we could take action effectively. I could make a couple of points. First of all, on the country-specific recommendations, I think an important issue is ownership. That means involving member states in the whole process of the European semester. Simply transmitting recommendations to member states and having only 2 or 3 days to respond is not enough. These recommendations have to be effective, but given the differences between member states, I think there needs to be real ownership of the recommendations on the part of the member states. Another point that I wanted to raise is on the social pillar of the European semester. Well, I must say I was very pleased to hear Marianne saying that a scoreboard has been prepared that will be included within the European semester. However, I think it is very difficult for Europe's citizens to understand that there are targets for budgetary aspects, but not for social aspects of policy. So I think that the new scoreboard will be an important step forward, but it cannot simply be some kind of symbolic initiative. It has to represent real action on the part of the European institutions and the member states themselves. Finally, I wanted to support Fabian Keller's proposal saying that these meetings should have recommendations and conclusions at the end. Thank you.
Ivana Maletic, European Parliament, EPP.
Thank you very much. You all stressed that we have growth. Growth is here, but we cannot be very enthusiastic because it is not visible in the citizens' life. We do not have at the same time, as a result, salary increase and decrease of number of people in risk of poverty. And this is why we should be aware that we should change something, especially regarding the way of financing and how we choose where we really invest and what we are supporting. So we are still not ready to support more risky projects, innovation, and novelties, transformative processes. For example, still with the new European, it is not anymore even new, European Fund for Strategic Investment, Juncker funds, we continue to support public and private projects, more combination of public and private and less private projects and more infrastructural projects, not so much innovative and new projects. So definitely we should think how to open finances more to support innovation and startups to become scale-ups and all the transformative processes we need if we want to really have the results of growth visible in everyday life of our citizens. Thank you.
Thank you. Now, Baroness Faulkner Kishwer from the House of Lords, United Kingdom. ALDE.
Thank you, Mr. Chairman. Can I say, in terms of the United Kingdom, we look with great pleasure at the economic recovery of the EU and the Eurozone and hope that it will indeed be sustained in the years ahead. It's been very interesting to listen to speakers emphasizing the need now to improve social cohesion, to tackle widening inequality, and so on, but at the same time also to improve EU competitiveness and to capture the gains that can come from innovation, R&D, and so on. I think listening to these comments, one of the things that comes to mind is the incompatibility of some of the aspirations in the speeches we've heard today. I'm reminded of an interview that Mrs. Merkel gave to the Financial Times in, I think it was 2013, where she reminded us that Europe accounts for 7% of the world's population, produces about 25% of global GDP, and has to finance 50% of global social spending. And I think it would be wise at a time of growth to bear those comments in mind, because you can't at the same time, I think, have the extent of competitiveness and innovation that we will need with the fourth industrial revolution and the rise of robotics and the disruptive technological changes that will hit the populations, while at the same time insisting that we have to continue to increase exponentially social safety nets and social cohesion and social security. It's just a thought that I wonder whether the panel might like to reflect on. Thank you.
Thank you. Andres Hunke, German Bundestag, Die Linke.
Ja, vielen Dank, Herr Präsident.
Thank you very much. I'm grateful to the panelists who looked at the issue of social inequality, because I think this is really one of the central issues in the current climate. Inequality is growing throughout the world. It's growing within Europe, and it's growing within the individual countries of Europe. And what we're seeing at international level is that we're seeing a paradigm shift. A number of international organizations, the OECD, the ILO, and the Council of Europe, and even the IWF, have tackled the issue of inequality over the last months and years. And I think it is extremely important. And the colleague from Romania pointed out that inequality itself is not a subject in the scoreboard of the European semester, or rather the social pillar. I fear that the social pillar is not going to be enough to iron out inequalities. So my question is for Commissioner Thyssen: what more far-reaching measures can we expect in this context? And the other point I want to talk about was the macroeconomic unequal weighting. Germany keeps exceeding the limit of 6%. So my question is, what proposals do you have? What instruments are there to tackle these imbalances? At the moment, we have 8.1%. That's the current state of play. And that's not good for people in Germany either, because it means that people in Germany are actually living below their means, and there's too little investment in the German economy, and that wages and salaries are too low. And then I'd like to say something about tax harmonization. You said that this is extremely important, and it is true that the inequality of corporate taxation between member states is a real problem. It means that big multinationals can play one country off against the other. Now, what is the situation here? And I'm also talking about tax base here, which is an important point in terms of corporate tax. Thank you.
Thank you. Next speaker, Giampaolo Galli, Camera dei Deputati Italiana, S&D Group.
Thank you, Mr. Chairman.
I think virtually all the remarks I've heard make this point, that there is a nice recovery ongoing. Actually, there is growth in Europe. However, in many countries, our people do not quite still see the benefit of it, or they see a partial benefit from it. This may in part be due to what we just heard, inequalities. In part, it may be due to the fact that it takes time for the scars of the Great Recession to heal. We have millions of poor people, millions of unemployments, and in the corporate and banking sector, we have high burden of debts in one way or another. This has implications for macroeconomic policies and for the country-specific recommendations that we are going to see in a few weeks. In particular, I refer to budgetary policy, which is a very complex issue. I think that the European Union has played an important role, the Commission has played an important role in helping countries gear their policies toward a reduction of debt. However, especially in the countries which have a very high debt to begin with, however, it is crucial to calibrate the recommendations in a sense of finding the right speed of fiscal consolidations. If you don't find the right speed, you risk backlash and you risk damage. You have to have targets which are understandable, credible, that the national authorities and the electorate find credible. It is key to find targets which are met and which are not changed every year and perhaps twice every year. And I realize that the Commission has made efforts in this direction. There has been progress, but I do think that we are not quite there. Thank you, Chairman. Thank you. Alex Baudry, Chambre des députés, Luxembourg, S&D Group.
Oui, Monsieur le Président, comme d'autres, j'aimerais...
Thank you very much, Chairman. Like the other speakers, I would like to very much welcome the new figures on growth. It's really important that Europe is finally joining its trend towards growth, despite the fact that there are increasing internal disparities, social disparities within the member states. So I think that we can rightly be pleased that we have the social pillar, where we've tried to get a social scoreboard into the overall framework of economic and monetary governance. I think that we really need to ensure that this social pillar isn't really a foreign element to this system that doesn't really fit in there, because everything else focuses on budgets and finances. So my question to Commissioner Thyssen is, how does the Commission intend to guarantee that the social dimension is not the poor relation while binding rules are fixed on budgetary balance and on public finances of the member states? Well, is there no way to respond to the social disparities being created? These do have an impact on budgetary figures. If you act on social inequality, that has an immediate budgetary cost. So how can you reconcile the need to act to support our societies whilst also defending the rules of the Stability and Growth Pact? The European Parliament is rightly putting a focus on purchasing power and in wage increases. Luxembourg has followed the Commission's recommendations, but we've constantly been warned about our automatic indexation of salaries. Well, now the Commission has finally come round to the idea of increasing purchasing power. So why do the European institutions want Luxembourg to get rid of a system that ensures that all salaries and social benefits are linked to inflation? Thanks.
Tadeusz Szymanski, Polish Sejm, ECR Group.
Bardzo dziękuję. Panie Przewodniczący, koleżanki, koledzy.
Chairman, ladies and gentlemen. Now, I'd like to bring to your attention that we have new priorities in the European Union. That is the migration, defense policy, innovation. These should not be a substitute issues, but should actually be discussed in the context of a more general policy, that is the policies which are about the closing the inequality gap. Mr. Hetman has alluded to those issues when he spoke about the inequalities on the scale of the entire continent, regions and countries. This is the stark reality that we are dealing with, as economic growth does not necessarily mean closing the inequality gap. Our delegation and also Poland would expect consistency here. And as you said, yes, the sun is shining. It's time to clean up and tidy up the house. However, we cannot just stop here, as many other challenges are still ahead of us. And what we would be expecting that the entire European community would be consistent in closing this inequality gap. Now, Poland is obviously ready to discuss those important issues, and we also are aware of the fact that we're dealing with, for example, Brexit challenges. We are ready for this debate as well. And we are fully aware of the fact that we need to find the missing funds, perhaps increasing the kitty, the European kitty, but we'll still be very optimistic. This is my plea with you, that when we go back to the foundations of the European Union, we will still be able to meet those challenges.
Thank you. Last speaker, we have the pleasure to give the floor of a member of the Committee of Region, Olga Zrichlen, invited member. Please, you have the floor.
Merci, Monsieur le Président. Madame la Commissaire, un plaisir de vous.
Thanks, Chairman, Madam Commissioner. It's nice to see you here. Good afternoon, everybody. It's a real pleasure for me from the Committee of the Regions to be able to take the floor this afternoon. I think that all levels of government where the European semester is involved should be represented. That means local and regional authorities too. They do have some powers in most political areas which are relevant to the semester. In fact, 3/4 of the recommendations made in 2017 do have a territorial dimension and can only be implemented if local and regional authorities actually play an active role in doing so. A few days ago, on the 1st of February, in the COR, we adopted a resolution on the growth survey for 2018, and we stressed the need to beef up structural reforms, to get rid of local and regional obstacles to investment, to bring towns and regions in as partners when it comes to implementing the European semester properly. We looked at that, and it's linked to the UN goals for 2030. Also, the resolution stresses that cohesion policy needs to be the main EU instrument to achieve the goals of the Treaty on Economic and Social and Territorial Cohesion, and needs to be based on the principle of partnership and decentralised governance. I'd also like to try and kick off a debate on various ways that the semester could be improved. This has to be a dynamic debate because the decisions on the new CFP and the improvements in EMU could call for changes in the semester and also closer links between the semester and cohesion policy. That's the way we see the new financial instrument to improve structural reforms could actually be brought in. But the main performance indicator in the country-specific recommendations show that there's still a problem. And the problem is that for country-specific recommendations on structural reforms, which don't have a real legal basis, let's admit that, the results aren't really all that great. And that's in spite of the efforts the Commission's made to try to reduce the number of them and to focus on what can be done on a 12 to 18-month time frame. There are various reasons why the reforms aren't brought in, a lack of administrative capacity, the technical complexity perhaps, but we think it's a lack of money at national level which is a big problem, because you can overcome complexity if you work hard enough, but if you don't have the money, there's nothing you can do about that. So how can we guarantee that the country recommendation reforms will come out as binding political commitments? Well, the member states have to answer that question. The COR is convinced that full participation of local and regional authorities in the semester as full partners, even if it's not crucial, would contribute to improving the implementation of structural reforms. And we also call that this participation take place when it comes to writing the actual reform ideas in the first place, as well as the implementation, follow-up and assessment. We've actually put together a code of conduct on this participation of local and regional authorities in the ES. It's in two parts. First of all, looking at the opportunities from a territorial aspect, and secondly, associating local and regional authorities as partners in the working out and implementing the reforms. I'm sure you'll have understood that we want this to happen. We want not just to be associated, we want a full partnership. It's something that Parliament backed in October 2016 when they backed the idea of a code of conduct, and the European Commission recognised was important if we were going to improve local and regional authority participation in the semester. Pity they rejected our code of conduct in the Commission, though, saying that subsidiarity might not be respected. In fact, as far as we're concerned, subsidiarity would actually be enhanced, and it would be actually damaged if local and regional authorities were left out, because it has a vital role to play in implementation. This also links into the recent Commission communication on a new tool to support structural reform, which is supposed to be part of the semester as well. We don't believe that reducing subsidies to member states, trying to encourage them to bring in multi-annual reforms, we don't think it's a solution. It's not a question of a lack of money. When you look at the 25 billion euro that the Commission is proposing to fund this initiative, does it really provide any added value? The present proposal, as it stands, is weak as far as we're concerned. It's a simplistic solution as far as the problems I've mentioned are concerned, and it could actually give rise to real subsidiarity problems. So, in order to make certain that the principle of subsidiarity and proportionality aren't affected, local and regional authorities need to be associated as full standing partners in the working out and implementation of structural reforms when it comes to the European semester, and the Commission doesn't seem to be envisaging that. On March 21st, the COR will adopt an opinion on the proposal which I am rapporteur. Colleagues, a conference such as this is a really great opportunity to talk together about the way we can improve effectiveness and the legitimacy of the European semester. On behalf of the Committee of the Regions, I'd like to thank you for hosting this and for having given me the floor. And of course, we're happy to see you this time next year. But also, let's hope that we have 2 days of fruitful debate, and thanks for listening.
Thank you. And now, very shortly, I have to ask you, but our speakers will have the opportunity to make a short reply. We will follow the opposite order, so we start with Fabienne Keller. Please.
Non, je voudrais simplement remercier l'ensemble.
I just want to thank everybody who's come along today. And I just wanted to repeat, Mr. President, that it would be very useful if at the end of our work we could reach a consensus which could express political opinion. I'd like to thank Ms. Marquez, who raised that idea of having some kind of a resolution. Thank you.
Much, to agree on a text, unless there is unanimity, we would need a system to weight the different position. And, this conference is not a composition that is able to make this weighting. For instance, now we had the broad majority of speakers from my political group, but I would be very glad that this position would be reflected, but I don't know that we can, unless we write something very generic, indeed produce conclusion without a voting mechanism which is able to appropriately weight different member state political groups. So it's not so simple as it seems, but it's a long discussion, and I'm very glad to continue this discussion. But for the moment, I give the floor to Mr. Damago Ivan Milosevic.
Thank you, Mr. Chair. Very briefly, it's obvious today we all discuss the convergence, we all discuss the social inequalities within the member states. And we agree all on that. We might not agree on how we need to tackle and how we need to deal with these inequalities and how to deal with further convergence. Well, as I come from the right, I always pushed, let's earn money first and then spend. Thank you.
Thank you. Bayet.
Oui, merci, Monsieur le Président.
Yes, thank you very much, Chair. I'd just like to thank all of the different speakers in the debate. For us as members of the European Parliament, it's very interesting to hear what is going on in the national parliaments. I'll just say that the European semester is a good tool. We want to support investment. We want particularly to support dynamic sectors and combat inequalities. But I think that the representative from the Committee of the Regions put it very well, that we need representatives from national parliaments, regions on board so that we can make this work and get better results across all of the different recommendations. Thank you very much.
Thank you. Christoph Hetman.
Thank you, Chairman. I use my time in the first part, so I would like to thank all the speakers for all their comments. Thank you very much.
Okay, please, Commissioner Thyssen.
Okay. Dank u wel, voorzitter. Thank you, President. If you allow me, I will speak Dutch, because we have excellent interpretation services in this Parliament, as I remember well from my former life. Dus ik zou graag in het Nederlands.
So I'd like to reply in Dutch. I'll be as brief as I can, but I do have to answer some very specific questions which were asked of the Commission. I listened very carefully and I noted that there was a demand for more shared ownership for the semester and the semester cycle and the whole exercise that we engage in together. With this Commission, we've made some significant steps on this. We published our annual growth survey, and for the first time this year, and the detailed plan reports will be sent to member states so that they can react before we publish the country reports. We're having discussions with governments, with the social partners in the member states, with the parliaments if you want. We will be touring the member states, and we're very happy to come to parliaments as well to discuss all these different issues. And then on the basis of all the discussions and on the basis of the reform programs of the member states and on the basis of the budget situation, the country-specific recommendations will be submitted to the member states before they're sent to council and adopted. So we're very open to this, and we're open to increasing ownership in the future, because it's absolutely essential in order to make sure that we're spot on when it comes to the analysis and the recommendations, and in order to ensure that these recommendations are actually implemented. Secondly, I'm very happy with the social dimension which is surfacing in this discussion. As I said in my introduction, we are convinced in the Commission that our social market economy must be promoted, which means that the social policy, social progress and economic progress should bolster each other. If we want a socially inclusive economy, then we have to have a social policy, and that's what we're focusing on, and the pillar is certainly going to help us. Our pillar of social rights, which we've all committed to. Some comments were made about the fact that more investment is necessary. Yes, we saw at the beginning of the Commission, that is why we had the Juncker Plan of the European Fund for Strategic Investments, and that's also why we focused on increasing public investment. It's not just a matter the mass of a budget also has to do with the quality of the budget and what you're spending money on. We've also done our utmost to make sure that the flexibility margin, which is in the Stability and Growth Package, is used. I'll refer you to the decisions taken in January 2015, and we use the flexibility as much as possible when we evaluate member states on an annual basis. And perhaps I can stress something that you may not be aware of. When we work with Eurostat, which is responsible for the classification of parts of the budget, Eurostat is actually under my portfolio, and I'm very happy that Eurostat has published a guide to set out very clearly, both for potential private investors and to authorities, in other words, in the context of PPS, making it quite clear how these PPS can be used and how they can be implemented in the context of budget evaluation. We've come up with a guide for energy performance contracts, and I hear that from those authorities which have used the guidance, that has created a lot of extra opportunities. And then there was a question, how can we, at a time when we need to invest massively in our new economies, how can we at that time demand a lot of investment in the social sphere? We can certainly combine the two. We always talk about modern social protection, and that means that we're not just making handouts, but that we combine the payments with services which strengthen people, which make them more able to deal with their lives, to help them to deal with other problems so they can get back on track and can be back in society and can get a job again. We are thinking in terms of investing in people, and that has an economic benefit. So there's no contradiction in this. We can't develop the digital economy without investing in people. We're going to need a lot more well-trained people, as some of you said. Inequality was another subject. Inequality is something which is very close to our hearts. Every year we carry out an evaluation on the basis of the S20, and we've seen that on average there's been an increase in inequality since the crisis, but not in all member states. In some countries there's increased equality, in other countries there's reduced inequality, which means that there is a possibility of fighting inequality and get a more inclusive society, which is why we need to expand our pillar. I could go into more detail and say what parts of the pillar would be useful for here, but we haven't really got the time. We've launched a number of legislations to form this social pillar, but we don't really have time to go into that either. There was also a question about the levels of wages and salaries, and that pay needs to be increased in some member states. That's what we said 2 years in a row in our semester document. We're assuming that if wages and salaries grow more slowly than productivity, then there is room to increase pay. And if there are countries which have surpluses, they also need to look at whether they can't increase pay. and we've made some recommendations about that as well. When it comes to non-performing loans and the bank issues that we're still dragging around after the crisis, it's a huge problem. The situation has improved. Economic growth is starting up, but there's a whole package of this, and it has an impact on our economy. The Commission is preparing a proposal to put some member states so that we can get rid of these non-performing loans. So we're going to find a solution which is going to mean that people can be successful. And when we talked about EDIS to protect investments, there was a question about how far it's got. We made a proposal from the Commission, but there are a number of member states in Council who feel that there needs to be more clarity about risk reduction before they're prepared to discuss more risk sharing. And that's what we're working at the moment. But the dossier is in Council. We've tabled it there, and we're working with the member states to try and get it moving again. And then various comments have been made about cohesion, the multi-annual financial framework, and the cohesion fund. This is a discussion which is starting up at the moment. There was a report published last week. It's not the vision of the Commission. It's various scenarios to follow up the discussion at the summit. I can give just one piece of advice to those people who feel that nothing in the budget may ever be reduced. I suggest that you go to your governments, your own parliaments, and plead in favour of increasing payments to the EU, because in that way we'll be able to plug the gap that we will have because of Brexit and because we have new challenges, and we'll be able to continue our policies that we've been implementing over the last years in a sensible way. So I need your help for that. I need you to go to your governments and to your parliament. So thank you very much for that, and I'll take your advice back with me.
And it has been a very interesting discussion indeed, which we will of course continue